Bitcoin hit a new high in early January this year, reaching a price of nearly $42,000. The price of the notoriously volatile cryptocurrency was about $32,500. Even mainstream financial institutions are warming up to Bitcoin in the long term. If the market cap gets high enough that it competes with gold, the price of Bitcoin could reach $146,000. Bitcoin currently has a market value of over $600 billion. But what is the reason for investors to queue up for the crypto? Let's find out. Hey guys, welcome back to the Crypto Trends. Today we're going to see about the real reasons why people invest in Bitcoin. Don't forget to like, share, and subscribe to our channel. So let's get started. One of the primary reasons for the rise of Bitcoin and any other cryptocurrency for a fact was the introduction of blockchain technology. The blockchain platform overlooking Bitcoin and other cryptocurrencies has been hailed to be a game changer for the crypto industry. Also, a large number of industries have benefited from the blockchain platform, from shipping and supply chains to banking and health sectors. The introduction of blockchain removed the role of intermediaries and third parties from computer networks. This enabled the distributed ledgers to facilitate new types of economic activity that were not possible before. This potential has made Bitcoin an attractive investment to investors. For those who believe in this ideology, investing in Bitcoin represents as a means to earn high returns while supporting the future of technology. Another common reason to invest in Bitcoin is a desire to invest in a product that is reliable and has a long-term store value. Bitcoin, unlike fiat money, has a limited supply that is capped by mathematical algorithms. This makes it impossible for any political or government entity to dilute the value of the currency through inflation. Also, due to the cryptographic nature of Bitcoin, it is impossible for a government organization to exercise tax or confiscate Bitcoin tokens without proper cooperation from the owner of the asset. This feature makes Bitcoin attractive to investors who are worried about runaway inflation events, bank failures, or other economical situations. Bitcoin has attracted many investors due to its proper deflationary and censorship-resistant protocols. This has led investors to claim Bitcoin as a digital gold. While many investors believe that digital currencies will become part of our day-to-day life, the crypto market is currently dominated by speculative trading. Further surveys of blockchain activity show that exchange trades remain the most prevalent use for cryptos and account for far more economic activity than stock trades and purchases. And Bitcoin tops the chart in this service. Cryptos are not unique in being subject to speculative bubbles and extreme inflations. Other assets, such as technology stocks, precious metals, cannabis stocks, and even real estate have also been subjected to market bubbles. When these bubbles popped, it ended badly for many investors who invested too much into the stock. As a new technology, many are hesitant to invest in Bitcoin, fearing in the crypto will crash sooner or later. One of the most impressive and unique features of Bitcoin is also its significant security. Since Bitcoin does not rely on a central intermediary, it falls directly on the user to safely store the cryptographic tokens which control their blockchain address. Investors choose to explore the digital currency space due to its special security measures and added safety protocols to protect their users' holding against hackers working constantly to refine their techniques. Bitcoin has become more of a religion than a solution to any problem. In fact, Bitcoin investors have their own jargon full of acronyms and phrases from HODL to whale, and pre-COVID Bitcoin conferences would attract thousands of attendees. The Crypto Crow even has a preferred car to buy with their Bitcoin, the Lambo, aka Lamborghini. Social media platforms have become key in the rise of Bitcoin. From A-listers who invest in Bitcoin to a highly active Bitcoin community on Twitter, TikTok, and Reddit, social media feeds into Bitcoin's popularity. These social platforms can also drive behaviors. According to research, when people talk about their investments in online social environments, they tend to become more risk-seeking in the type of investments they make. And like all commodities, Bitcoin was not immune to the COVID-19 pandemic either. Fortunately though, Bitcoin prices were positively impacted by the viral breakout in bursts. The increase in online shopping and contactless payments only facilitated this upsurge. With everyone staying at their homes, Bitcoin positively influenced social encouragement, cybersecurity, government regulations, and infrastructural quality support on behavioral intentions. The shortage of conventional money and the worsened cashless transactions dilemma attracted cryptocurrency under specific situations. Around 1.7 billion non-banking adults faced the fee transfer problem, and more than half of the issues were resolved through a crypto asset during the pandemic. The sense of safety changes people's psychological behavior towards Bitcoin. Social media plays a vital role in observing individuals' reactions, opinions, and mental health who use divergent social media platforms for information. Bitcoin is commonly prevalent in developed and developing countries. Social media marketizes the cryptocurrency and conveys information about it to every social media user. Social trends also affect human psychology, whether positively or negatively. It is up to the trending information. Cultural factors can influence employees' attitudes in implementing environmental risk policies. However, some studies compare the psychological motives of crypto trading to that of a gambler. Indeed, similar arguments have been raised in relation to the day trading of shares, which appears to entail a significant element of luck or chance, inconsistent returns, and a likelihood of poor returns for most investors. Stick to the end of this video to know more about Bitcoin, and don't forget to like, share, and subscribe to our channel. Day trading differs from conventional long-term share investing in that the event frequency is often short. Purchases and sales may also be more based on technical analysis than appreciation of the intrinsic or long-term value of the stock. Rather than race and sports bettors studying form guides or sporting statistics, day traders study candles, patterns, or ratios and support levels. While these indicators can often be useful guides to price movements, they often involve ad hoc judgments and are not capable of anticipating sudden market changes. As a result, it is said that the majority of coin and day traders do not make returns higher than the market, and many lose money. Few day traders of shares last for very long in the market, with only 7% estimated to last 5 years in the business. These emerging findings and the structural characteristics described above, therefore, raise important questions about the potential risks inherent in crypto trading. A particular focus on whether this activity could potentially lead to excessive behavior and harm in some individuals is necessary. The illusion of control is likely to be a strong feature of crypto trading, and this feature is also likely to be common to sports betting and day trading. A social media culture of crypto advisors, spruikers, or influencers, and more experienced advisors are on the rise on platforms such as YouTube. Searching online quickly shows that it is possible to find at least one positive endorsement of at least one major coin. Some of these arise from what appears to be more experienced and well-informed sources, but there are many others that are entirely speculative, ill-informed, and potentially misleading because they leave out key information. Although similar promotional information has historically been available concerning conventional shares, the volume of material, the interactivity, and the superficial confidentiality of the information, i.e., the sense that one is in the know first or is getting some special insights, are much stronger. Promoters of particular coins can show evidence of how much money they have already earned from buying in very low, and they can use graphics with great effect to show the anticipated growth. This can serve to create a sense of urgency and a need for immediate action. It also encourages a culture of mutual social reinforcement in which followers of channels seek to promote their successes, while also reading about the gains scored by others. Crypto trading is a rapidly growing activity that is likely to receive increasing mainstream acceptance over the next few years. We believe that the topic is important in behavioral addiction research for two reasons. The first is because it brings together elements of risk inherent in gambling, but also in excessive social media use. Particular features that make this form of speculation unique include its 24-hour availability, long-form nature, the extreme volatility of outcomes, and the strong influence of sentiment and social influence. In this sense, it has the potential to be riskier for inexperienced traders whose engagement in the market has been strongly influenced by media attention or fear of missing out sentiments. A second issue is that crypto trading provides many opportunities to examine the operation of many established principles of social and cognitive psychology. Opportunities exist to profile the distinct risk factors that differentiate crypto trading from other similar activities, day trading and online sports wagering, but also to identify protective factors that can avoid the development of the various harms that might arise when large numbers of inexperienced investors enter the market. Research programs examining these factors are likely to be influential to discussions of consumer protections and inform potential steps for the regulation of trading platforms and other activities that involve cryptocurrencies. Hence, like all modes of investments, Bitcoin has its own advantages and shortcomings. At the end of the day, it all comes down to the individual trader to decide whether to put all of their savings in an electronic entity that made no sense a decade ago. Yet, with all of these negative sides, the world has seen multiple millionaires who invested in the right crypto at the right time, living the rest of their lives out in peace. Don't forget to like the video, and do share the video with your friends. For more videos on how to earn quick bucks, hit the bell icon to get notified whenever we come out with a new video.